Good morning, everyone. My name is Trudy and Tomlinson, the Procurement Officer at Wisik Distributors Limited. My team and I will be sharing with you key procurement documents and their purposes in the procurement cycle and how these documents drive business efficiency. So let's dive right into our first document, which is the quotation. What is a quotation document? A quotation document is a formal document that is provided by a supplier or vendor that outlines a detailed estimate of costs for goods or services, helping buyers compare prices, assess value, and make informed purchasing decisions. Elements that are commonly included in the quotation documents are description of good or services, quantity, unit price, total cost, terms and conditions, as well as delivery details. Two advantages of quotations: one, price comparison, and two, budget planning, because quotations help in planning and managing budgets by providing accurate cost estimates. Two disadvantages of quotations: one, they are time consuming, and two, inaccurate estimates. Sometimes quotations may be inaccurate, resulting in unexpected costs or disputes. Impact of quotations on procurement and payment process. One, it supports decision making because quotations provide essential for comparing options and choosing the best supplier. Two, it ensures financial accuracy because quotations that are accurate may help with budgeting and forecasting, reducing the risk of financial discrepancies. Three, it maintains accountability. Quotations also serves as a documented agreement, ensuring transparency and accountability in financial transactions. And four, smooth flow of procurement and payment, which means timely and accurate quotations facilitate a smooth procurement process, enabling efficient payment process. Potential issued with delayed or inaccurate quotations. Delayed quotations can lead to procurement delays and missed opportunities or penalties for late delivery, while inaccurate quotations may result in budget overruns or unexpected expenses, which may also result in damaged relationship with suppliers or internal stakeholders. Moving on to our second procurement document, which is our purchase order. What is a purchase order? A purchase order is a commercial document issued by a buyer to a seller, indicating the type, quantity, and agreed price of goods or services to be purchased. The purpose of a purchase order is to authorize a purchase order, specify details, create a contract, and facilitate tracking. Two disadvantages of a purchase order. One, its complexity. Managing multiple purchase orders can be complex, especially if there are challenges or cancellations, potentially leading to errors in financial reporting, as well as it has time issues. Purchase orders may not always align with invoice timing, causing discrepancies in financial reporting if not properly accounted for. While our two advantages are budget control and also transparency. Impact of purchase order on procurement process. One, it streamlines procurement. Two, it establishes clear communication. And three, it gives better vendor management because purchase orders also enable better tracking of orders and vendor performance, facilitating more effective vendor management. Potential issues with delayed or inaccurate purchase order. So we have the supply chain disruption, inventory management issue, financial losses, strained supplier relationships, as well as operational inefficiencies. Moving on to our next procurement document, which is the journal entry. A journal entry is a record of a financial transaction in a company's accounting system. It commonly includes date, accounts affected, debit and credit amounts, and description. Two advantages of journal entry in financial reporting are accurate record keeping, and 2, transparency and accountability, because journal entries enhance transparency by clearly showing the financial impact of transactions, making it easier to track and verify financial activities. While our 2 disadvantages are its complexity, because preparing and managing journal entries can be complex, especially for large organizations with numerous transactions, potentially leading to errors if not handled properly. And it is also time consuming. Recording every financial transaction in journal entries can be time consuming, particularly if done manually, which may delay financial reporting and analysis. Impact of journal entry on procurement and payment processes. As it relates to the procurement process, it has accurate recording. It also establishes financial transparency. And as it relates to the payment process, it has accurate payment recording because journal entries accurately record payments, while the accounts payable management, it also establishes how to manage accounts payable. The overall impact, journal entries enhances financial accuracy, transparency, and accountability in procurement and payment processes. Potential issues with delayed or inaccurate journal entry. 1, financial reporting errors. It may also have accounting discrepancies, audit issues, financial analysis challenges, and also compliance risk. Ethical considerations in procurement documents are that they establish accuracy and transparency because documents are accurate, complete, and transparent. Also, fairness, it avoids biases or favoritism in document preparation. It also has its approval process where the authorization ensures a proper authorization and approval procedures, as well as conflict of interest. Record keeping, accuracy, and completeness. This maintains an accurate and complete records. Then you have the retention and accessibility. Consequences of unethical behavior. 1, you have legal and financial consequences, reputational damage, and operational disruption. This brings me to the end of my presentation and will now hand over to Mr. Craig Goffe for accounting clerk. Mr. Goffe.
Thank you for that, Trudy. Now, as the accounting clerk, I also assist the warehouse team, and based on that, we receive goods. Now, one of the documents that we receive in the warehouse is a delivery note or a delivery docket. Now, what is this? This is a document that is received in the warehouse. It accompanies goods. This is basically your proof of delivery. So basically, this show the number of items you're supposed to be receiving, the quantity, the description of the items, and the location it's supposed to be shipped to. Right. The purpose of this is, as mentioned, it's to confirm proof of delivery, proof of the goods delivered, including the quantity, date, and condition. An advantage of this, or a few advantages of this, is that one, it confirms the receipt of goods. So you don't have the accounts team receiving an invoice and then we're going to hunt down to say, did we get this? Didn't we get this? And it also facilitates inventory updates. So the warehouse team signs off that they received received products are in certain quantities, and then the inventory team can update our system just to reflect the same. Disadvantages, it can be forged or misreported, as this is in most cases a paper-based document and it is up to human intervention and human error. And also, another disadvantage is that it may not reflect the actual condition of the goods included. Meaning you could have damaged products on this, but then the team is not now nobody's going to write on their delivery docket that, oh, this was damaged. So it is for up to us at the warehouse to make these necessary corrections. Some of the impacts of this is the key for verifying invoice claims, meaning, as mentioned, the accounts team receives an invoice. We need to know it was these products received. We verify using the delivery docket or the delivery note for stock accuracy. We need to know when the stock came in, where it went, or if it came any at all. Um, and also, delays or errors can affect customer orders or stock control, meaning you're waiting on products and you can't track it. You need to be able to have that measure in place to find out where it is. Ethical considerations to look at. Tampering with the delivery data or signing for incomplete orders is dishonest and breaches the company trust, and it ruins your reputation as an individual and your company as well. Because if you're signing for something that's incomplete, you're now putting the company at risk to say, hey, we received these products when you didn't, or you signed for something that's damaged, and now we are reading it as good products in the warehouse, which they are not. Another document to look at is our deposit slip. Now, for most of us who will go to banks, we will see this small strip of paper that the tellers usually hand us. The purpose of this is to record cash or check deposits made into a bank account. At times now, they're also utilizing these for direct deposits with the advent of technology and wire transfers. The deposit slip is to track these, so it's usually done in triplicates, so you have one copy for yourself, one for the teller, and then for accounting purposes. Sorry. Advantages, it confirms the funds deposited. Eh, Sorry, it confirms the funds deposited, meaning we are now have this measure in place to track what was deposited, the quantity that was deposited, how, when, where, what method was used to make the deposit. And it aids in cash flow tracking. We are able to see where the money went, how much money went, where we took the money from, where we put the money. So we're not leaving things up to chance. Disadvantages that may occur is errors in misstating balances, meaning if we put the incorrect numbers on this, then you're going to have the errors in terms of the balances that you're transferring, the errors in terms of the amount of money that you want to transfer, because it's all, again, manual. And physical slips, they can be lost or damaged. So for accounting purposes, we have to keep most of our documents for between 5 to 10 years. These slips, again, being paper-based, are prone to being misappropriated. Business impact, it ensures financial transparency, meaning we now have that for auditing purposes, we're tracking the cash flow. But missing slips do hinder bank reconciliation and may cause audit flags, meaning we're looking for the money, we're looking for the slips, we need to know where they went, and we're not able to locate these. And then your auditors are going to say, wait, what happened to $256,000 that you're supposed to have? Sorry, ethical considerations is falsifying the amounts or the deposit dates can lead to financial misreporting or theft, and can put the business in breaches of the law, and then just breaches of common trust and behavioral practices. All right. The next document on the list is the remittance advice, which my team member will speak on.
Thank you. All right. So the remittance advice, the purpose of this is it confirms payment details to our supplier. It also supports reconciliation. And some advantages and disadvantages of the remittance advice is that it ensures supplier recon. It also provides an audit trail so you can track payments. It also the errors may cause confusion, and it's time consuming if it's manual. So those are some of the cons. So errors, and also it's time consuming. So impact on business operation is that it supports decision making with accurate payment and expense data. It also ensures financial accuracy through clear documentation, and it maintains accountability with approval and audit trails. And it also enables a smooth procurement and the payment process. So you would have certain information on the remittance advice, like the company name. So you'd have a clear idea of who you're making a payment to. Also, their payment information with the bank account number and stuff like that, so where the money would be going to. So there are clear audit trails. And the consequences of missing or inaccurate records is that missing remittance advice could lead to unapplied payments, delivery delays, and also an inaccurate advice could also have disputes and reporting errors. Ethical considerations in the procurement process is that it ensures accuracy, transparency in documentation, and only authorized approvals are allowed. And it also maintains and secure complete records. So the remittance advice, overall, it is used to ensure accuracy and accountability, smooth procurement workflow, and financial control and ethical compliance. So, and then we'll move on to our petty cash voucher. The petty cash voucher, it records small and urgent expenses. So those little things that what you would call miscellaneous cost, and it ensures accountability in cash use. So it tracks how small cash around the office is spent, and it also prevents misuse of these funds, and tracks small expenses, and these small errors can also add up in the long run, so they have to be tracked accurately. So the impact on business that it ensures transparency in regards to spending of small cash amounts. And a missing cash voucher, the consequence of missing or inaccurate records when it comes to the petty cash voucher includes on-track expenses, delays. This slows operations, so for example, emergency purchases. And ethical consideration in the procurement process is that if it's not documented properly, persons can falsify cash use, so that can lead to fraud and also lack of transparency, and also omitting payment info, which can lead to legal and reputational risks for the business. So all in all, keeping track of small cash around the office by using a petty cash voucher, it helps in the transparency process, and it also helps with tracking and audit when auditing is being done. So we can move on to Mr. Chambers now for his piece.
Thank you so much, team. All right, so the first document I'll be touching on the credit note. Right, so a credit note is issued by the supplier to a customer to acknowledge reduction in amount owed, often due to return goods, damaged goods, or any pricing adjustment related to products purchase. Two advantages: ensure accurate financial records. A credit note, it would serve as an official document that corrects or adjusts previous transactions, such as return or discount. Another advantage is it enhances transparency and trust. So issuing and recording a credit note, it fosters transparency, trust, and good relation with your supplier. It also demonstrates that the company maintains honest and open communication, regardless of the discrepancies. Disadvantages of credit note: this potential for errors and fraud. So if you're not manage it carefully, credit note can be issued and manipulated. For example, employee might issue unwarranted credit notes to conceal errors or inflate refund. Another disadvantage is impact on cash flow planning. So while credit note reduce liability, they can also impact cash flow forecasts and liquidity management. So some of the features on the credit note, you would have your credit note number, the invoice number, and the description of the product that is being returned. The next document I'll touch on invoice. So an invoice is a formal request for payment issued by the supplier to a company delivering products. So my advantages of an invoice: legal and formal evidence of transactions. So an invoice is a legally binding document that evidences the sale of goods or services. It also specifies the amount payable and payment term and details of the transaction. Another advantage is it facilitates accurate revenue recognition. So it is crucial for recognizing revenue in the correct accounting period, aligning with revenue recognition principle. Two disadvantages: risk of error and omissions. So invoices can contain mistakes such as incorrect quantities. Incorrect quantities as also another disadvantage: administrative and operational costs. So generating and verifying and managing invoices require administrative resources, including staff time and technological systems. So as it relates to impact on the documents, the impact on invoice, it ensures timely and accurate payment. It supports cash flow management and provides data for financial analysts. Impact for credit note, it maintains correct account balance. It also supports inventory adjustment and ensure trustworthy financial reporting. Ethical consideration. So integrity during the document preparation. So all invoices and credit note must be prepared truthfully, reflecting actual transaction. Approval and record keeping. So proper authorization processes should be followed before issuing or adjusting documents. And consequences of unethical practices. So this is basically falsifying or misreporting, and this can lead to legal penalty or loss in the reputation of the company. So these are my two documents that I'll touch on. Thank you.
All right, thank you for that, guys. Now, to wrap up, the final document we are looking at is a general ledger. So what is a general ledger? A general ledger, or GL, is a set of numbered accounts. A business uses it to keep track of its financial transactions and prepare financial reports. Now, the purpose, it summarizes transactions by accounts from journal entry. So, for coming from the general journal, you will have the bank account, your petty cash account, your marketing expenses. These are just different accounts that would fall under the ledgers. Advantages of the ledgers, it shows accounts balances, and it also helps in financial analysis, meaning you're now able to track your money better, you're able to see your cash flow, Disadvantages, it is laborious without software. So in this new age, we have to invest in software, and one wrong entry distorts the balance. As someone who has done accounts in high school, I can tell you that if you get one entry wrong, you won't realize until you're trying to carry out your balance sheet, and then you're going to realize that okay, something is wrong, and you need to track it back to the beginning to find out where you went wrong. And that is similar for businesses today. Impacts, it's critical for trial balance and financial health. Incomplete red ledgers risk misleading your stakeholders. So as a business, you have to ensure that you have the correct information being shared. Ethical considerations, it should be timely, accurate, and backed by evidence. Fabricating entries breaches fiduciary duty. Sorry. Now, whilst each of these documents do serve a clear purpose in the overall procurement process and the financial health of of a company, it is very important for us to note that they are both parts and they need to be effectively executed in order for us to complete the procurement process, in order for us to report accurate information, and in order for us to track our finances within a company effectively, efficiently, and report accurately. Thank you.
Thank you.
Okay.